Hey guys, it's ChrisWatters. Welcome back to my video real estate blog where we talk about all things real estate in Central Texas. I've got a guest with me today. This is Sean, and he's got some questions today. Sean, what are the things on your mind about real estate?
Hey, Chris. Thanks for having me on the page again today. Today I thought we could talk about something first-time home buyers out there may have some questions about, and that's the process of obtaining a mortgage. So let's say that I'm one of those potential buyers. How do I start the process of getting a mortgage?
Great question. So I definitely recommend giving our team a call, and we can actually recommend a lender based off what you're looking for. So, for example, different banks have these niches they kind of really excel at. So, for example, we've got one bank we work with that is really good with buyers that are looking for building a new construction home, and they need what's called a construction interim loan. So if you're thinking about building a new house, we've got a great bank we love working with on construction interim loans called Broadway Bank. And then we've got another mortgage bank called American Pacific Mortgage, and they are great working with people that need credit repair. Maybe they've got low credit scores, and need some help getting the credit improved in order to qualify. And then the third lender we recommend is more for your conventional financing, or if you're a first-time home buyer, you've got decent credit, and you don't have a huge down payment, but you do have a decent sized down payment of probably maybe 3.5% to 5%. This bank we work with is called Supreme Lending, and they are fantastic. I've worked with them the longest. Supreme Lending is just phenomenal when it comes to helping buyers get maybe it's a VA loan if they're a veteran, or if they're a first-time home buyer, getting what's called an FHA loan. An FHA loan is basically a government loan where the down payment's really low. And then if you're a traditional buyer and you've got some big chunk of money to put down, they can also help you get a conventional loan. And they are really great with like single family homes and condos. And so that's the lender I recommend for that. So I've got 3 different partners I recommend, and that's kind of the niche they each excel at really, really well. The first step in getting a loan is, once I connect you with one of the loan officers at these banks, is they'll send you a loan application, and you'll fill out that loan application, and they're going to just kind of read through what your income is, what kind of assets you have, your liabilities, and they will run all this information through a system which will basically tell them what you can afford, how much of a mortgage they're going to give to you. They'll also do a credit check, see which loan program you can qualify for, and where they can get you the best deal. So just feel free to reach out to me if you have any loan questions, and I can guide you to the right place.
Okay. So what documentation is required in order to get a mortgage?
So it's a lengthy process getting a loan. I mean, you're going to try to get possibly hundreds of thousands of dollars. So at the very beginning, all you have to do is fill out the original mortgage loan applications. That's super easy. But the questions the bank is going to ask you for is they're going to want recent copies of payroll stubs. They're going to want copies of your bank statements, and they're also going to order copies of your IRS tax returns. So those are some of the documents you should be prepared to have ready to give to the loan officer at the bank. Now, as they start doing more research, digging into all the particulars of your loan, and let's say, for example, you're a self-employed individual, or you run your own business, it may be more complicated. They may need to get tax returns for your business. There is ultimately what's called an underwriter at the bank that does a final review of all your documentation. And so the loan officers try to mitigate a lot of the time it takes to get all these documents together, and they try to imagine like what's the underwriter going to ask for if they see anything that's maybe questionable. Like, for example, what if you are self-employed and you've only been in this new business endeavor for like 6 months? The underwriter is going to tell you, typically you need to have been in that profession for 2 years, in that environment of being self-employed in whatever business endeavor for typically 2 years. That's kind of a rule of thumb. So they'll tell you in advance, like, hey, the underwriter is going to flag this and you may not get the loan. But good thing is, if you are a W-2 employee, and let's say, for example, you change jobs, typically the bank will only want 2 payroll stubs to validate you've been there for a good amount of time, and then they'll verify employment. Call someone at the company to verify employment. So, anyways, those are preliminary docs, like I said. And as they dig deeper, there may be additional questions they have. The loan officer will try to help you mitigate things maybe the underwriter asks. But sometimes I've seen things, for example, where an underwriter asks for you to send a copy of a gift letter where, for example, maybe like a family member gave you $1,000 gift. And so there's weird things that come up in underwriting where they'll ask for explanations. So it's difficult for me in 2 minutes or 3 minutes to tell you every potential possibility. But the big rocks are the loan application, payroll stubs, IRS docs, and bank statements. Those are the big ones.
Okay. So there's a couple terms that come up in this process. One of them is pre-qualification, and the other one is pre-approval. Can you kind of explain the difference between the two?
Yeah, great question. So once you actually fill out a loan application, the lender will just will review it all. They may run your credit, and then they may look at all the numbers you plug into the loan application, and they'll look at what your debt to income ratio is. That's a key indicator. They want to look at your debt to income ratio and your credit score and your income, and they can tell you, without actually validating by looking at bank statements and IRS statements, they can tell you, hey, you're pre-qualified, for example, to go and get a $200,000 loan. And so the pre-qualification letter is kind of like the first step of them, making you have some awareness around what you can afford. But the pre-approval letter is when they've actually run your credit, validated bank statements, they've looked at your IRS statements, and it's basically a done deal, and you're essentially almost guaranteed the money because they have physically seen all of this paperwork, and they validated everything you put on that loan application is accurate.
Okay. So the final question that I have for you is, how do I know what is the best mortgage for me?
So great question. So like I said at the beginning of the call, the best mortgage for you really depends on the type of property you're buying. So there's different loan products depending on, what your debt to income ratio is. There's different loan products, like for example, if you're a veteran where you can get, some really great benefits. There's loan programs for people that are buying a really expensive luxury home called jumbo loans. So it's really case by case which loan program you should get into. So it's really important somebody takes you through a very consultative approach to ask you a lot of questions about what you're looking for in the property you buy, and then you can be led into the right direction to make sure you get the best loan program possible.
All right, awesome. Well, this has been a lot of great advice. If anyone has any further questions, how could they reach out to you?
Yeah, so again, if you're watching this on our video real estate blog, at the top, you can search homes for sale. It's a backstage pass to the MLS, so you get access to everything listed for sale. And if you're a homeowner and you're thinking about selling your house, we also have a home valuation tool at the top. And if you're watching this via email or Facebook, just go to our website, ChristopherWatters.com. And you can search homes for sale. We've got our phone number on there, and you can reach out to us with any questions to find out, if, for example, you want to find some off-market properties. Maybe you've been looking for a home and you keep missing out on deals and you want to find something that's off-market. We've got a list of coming soon inventory on ChristopherWatters.com. And then also, if you call into our office, we can even tell you about stuff that's not even on the website yet. And the home valuation tool is great. It's a kind of a low end to a high end range on our website. But if you want to know to the penny roughly what you're going to net in your pocket when you go to sell the house after you deduct, like your property taxes owed and title policy fees, et cetera, we can run a net proceeds estimate for you, so you have kind of like an equity analysis to know how much cash you'll get. So if you're looking to sell in the next 3 to 6 months, I definitely encourage you to give us a call.
All right, sounds good, Chris. Thanks again for having me on the page, and looking forward to next time.
Cool. Thanks, Sean.
Thanks. Bye.